Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the H1 FY26 post-earnings conference call of Forcas Studios Limited. Today on the call from the management, we have with us Mr. Shailesh Agarwal, Managing Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to briefly run us through the presentation with business and performance highlights for the period ended September 2025, their growth plan and vision for the coming years, post which we will open the floor for Q&A. Over to you, Shailesh.
Good afternoon, everyone. Shailesh Agarwal, MD and CEO of Forcas Studio Limited. We hereby present our half-yearly FY26 results with you. Can we go ahead with the presentations, please? So we have added around 1 million customers in last 6 months. We have delivered to more than 1 million customers through B2C platforms. Next slide, please. Keep going ahead. So we have added one warehouse in Varanasi to cater to the UP market and North India market. Also, we have gone live with Myntra Forward as their futuristic brand for the masses. We have already lived around 2,000 options on Myntra Forward. We are also stocking our products through e-commerce site Zepto, quick commerce site Zepto, and stocking it to almost 17-18 cities in the country through their dark stores and delivering it to almost all the major cities in the country. We have added 7 new categories in the quick commerce segment where we are seeing good traction. So our brand revenue has rose from 48 crores to 71.9 crores year on year. Also, our overall revenue has gone up by 50% comparing last H1 to this H1. Both our brands FTX and Tribe has seen good growth. FTX has grew by 49%. Tribe, being the smaller brand as of now, has grew 35%. We have also added women wear and kids wear categories under our brand name FTX, through which we have generated 5.5 crore rupees business till date. We have launched these categories through offline channels first to test the market and then take it online in Q3. Next slide, please. So our business model remains same. It is just that we have added quick commerce to this. Next, please. So since last year till date, we have increased our warehouse capacity from 6 million units holding capacity. It has gone to, 6 lakh pieces holding capacity. It has got to 2 million units holding capacity. We have also expanded our Varanasi warehouse, as I just mentioned. So today our goods are being stocked at around 9 states. And that is for e-commerce, and for quick commerce, it is being stocked at more than 15-16 cities in their dark store, through which it is again dispatched and delivered through around 50 to 60 small towns and cities. Next, please. So this was our product portfolio, and now women and kids both have also started. So we have 3 verticals now. Yeah, that's it for you. Next, please. Yeah. So this is our revenue breakup, the comparison between FY25 and FY26. The business strategy remains same. Again, remains same. So Zepto and Forward has been added to our e-commerce business. We are also looking to add on a couple of more e-commerce, quick commerce sites. So this is very interesting. It is probably the first time in our country that winter wear is being sold through quick commerce within 10 minutes delivery. So we are seeing very good traction in our winter wear products, including jackets, sweatshirt, sweatpants, uh, through Zepto, and we are delivering it within 10 minutes. Also, we have launched kurtas, and surprisingly, kurtas is doing very, very well. It was a a first test to see how kurtas does in quick commerce, but we have seen kurtas are really driving our business in quick commerce. So kids and women being launched, now we are taking it to e-commerce also, and we will be expanding our line in both kids and women. We also plan to launch a women sportswear line uh, in the same budget segment, 299 to 599, 499 from Q3. So you can go through the financial highlights. So year on year, our growth has been 50.6%. EBITDA margin has been uh, it's up by 72.3%. We have almost doubled up our profit.
Can we move to Q&A?
Yes, please.
All those who wish to ask a question may please use the option of raise hand. In case you're unable to raise hand, you may unmute and ask a question. We take the first question from Kush Tandon. Kush, please go ahead.
Hi, Sailesh. Congrats. I think the growth has been pretty strong this H1 and numbers are stacking well. Congratulations on being onboarded on Zepto also. Just wanted to understand, what has been driving this growth. I know the base is decent for us, but interesting price point, channel. Also, we are omni-channel. So can you elaborate a little bit on what has been driving this growth, different products, more categories being added?
Yes, yes, yes. Thank you, Kush. Thanks for your question. So I believe, the understanding of the data and the availability of data is now actually driving our uh, growth. Actually, there are multiple factors. So one is the data point. So we are in this business since last 15, 18 years, and through e-commerce, now we have the data of the pin codes of, what people are buying, at which state, at which location. So that is helping us a lot. So just for the insight, as we wanted to launch Kurta, so we did it in the quick commerce segment first. So kurta is one product which generally men don't plan too much, because this is an occasional wear. We need it for maybe a puja or a festive occasion or something. So generally it is a last minute buy. So we have seen the sales of kurta can be driven only by availability, especially when it is being sold at a price point. So our kurtas are being sold on Zepto from 400 rupees to 600 rupees, and that is being delivered within 10 minutes. So surprisingly, our kurtas are doing very well because now people are gradually getting to know that apparels is also available on quick commerce. So again, that is again a data-driven science. We knew which location we need to send the kurtas. So our kurtas are doing good in Hyderabad area, or say a UP, Lucknow, and also some parts of southern India. So this is one. Second, I think the understanding of customer, we have been in this business since last 15, 17 years into the apparel business. We have seen all the ends, right from the fabric to fabric manufacturing to the garment manufacturing, corporate supply, offline business, online business. So I think the data and the understanding of customer has really helped us, crack the code of growth here. And I again want to say our team, our team is also built up in such a way that managing the right price point swiftly is very important. And I think our team is now designed in such a manner that we are able to deliver the same. So all this combined, I believe, is working out for us and giving us decent results.
Okay. Isn't the price point very competitive in your view?
See, if you are able to, you know, convince a customer in today's time to buy your product, not just because the price is there, but with the price, if you have the right product also, and the customer is coming back to you, I think then only a brand can be built. So with price, you can sell only once. The second time, the customer will only buy if he has liked the product. And I think that can be seen with our review ratings on the marketplaces we are selling, and also our repeat ratio.
Okay. Menswear and other categories are very different in terms of the way they work, in terms of return profile, SKU requirement. So,
True.
how do you see the women's wear and kids wear? Are we, obviously we've seen some initial success, but as we scale up, do we see some challenges on returns, on SKUs, on inventory?
So it is a valid question. So number one, every category has a different return ratio for sure, and accordingly the pricing is set. So we don't, take the same return cost what for a t-shirt in menswear, then versus a bottom in menswear. So similarly, a product selling for women will have a different ratio, and the cost, calculated for the same will also be accordingly. That is number one. Number two is, we always know that with women wear the return rates are a little higher. So what we try to do here is, we have started with women bottoms first. So women bottoms are something where the return ratios are way lower than women tops. So what we are trying to do is get into the women bottoms first and women athleisure first. Uh, Build a women say customer base like we have already done, with the menswear. Our brand being recently established in the marketplace category. So we the algorithm already pushes our brand and any new product we launch. So taking advantage of that, we want to crack the women wear customer base first, and then go to the higher return products such as tops and other stuff. Doing that also, we will go offline first, see the traction, understand, uh, build the right say spec, right colors, and then take it online. So there, our return cost will be hedged. That risk will be hedged.
What are the returns as of now, as we speak?
So we have probably one of the lowest returns in the industry. That is for two reasons: the price point and the quality we are providing for that price point. For the top wear in menswear, our return is below 7%, which is, I think the industry standard is around 18-19%. And bottom wear, our return is around 14 to 15%. The industry standard is around 30%. So our average return is still below 12%. As top sells more, so the ratio becomes, below 12%.
Okay. 12% in a apparel category sounds pretty decent. So you are trying to say that the price point is driving a better return and the product quality.
See, I truly believe that today's customer will stay with you if you give them a wow factor. The price in apparel can be the first buy factor, but only a wow factor can sustain him and will make him stay with the product. So we work very hard in terms of our designing, our quality, our price point, our strategy to make sure that the customer is happy and ultimately they start looking at us as a brand in the same category, in the same segment.
Okay, a couple of more questions on inventory and working capital. I think the receivables have come down, but inventory has shot up actually. Would you like to comment? We are obviously in a business of managing inventory. So is there
Our
seasonality issues, or how should we look at the cash flow and inventory going ahead? And do we need to build inventory on certain months, or how does it work?
Yeah, so I will take you through this. Number one, yes, our receivables have come down considerably, as I quoted the same in the last con call. Number two is the inventory. So these numbers, what you are seeing is a September end numbers. So there are two, three factors which drive this inventory. So the inventory has gone up hardly by 30 to 40 days, and that is because of several reasons. Number one, we are growing by almost 50% top line. So if we want to, grow with 20 to 30% top line, probably we can manage with the same sort of inventory level. But if we want to grow with 50, 60, 70%, we need to, add on a little inventory, keep them and try to sell them. So there are two types of inventory. One is a set inventory and one is a new inventory. Always 90% of our inventory is the are the products which are already a set product, which is selling more. And also, as quick commerce has started, also forward has started with Mintra. So we want to make sure that this quarter three, the winter quarter, goes good for us. So that's why we have, it's an intentional decision to, add some more inventory and try to grow in this quarter as well. So this is one. Number two is uh, Kolkata in October's month is almost dead for production. We cannot produce anything, especially garments, because labor generally, is gone back to their hometown and all. So hardly we get 7 to 8 days, maybe a week, to its max in Durga Puja time. Uh, so winter wear is one thing you cannot produce in November. You have to be ready with it. So this is also one challenge with us that at the time of any season change, be it winter or be it summer, we'll have to add up to the inventory to cater to the demand. So the speed we are growing at with, I think we will always need to stock up a little more to cater to the demand we are at.
Okay, but there are months where your inventory is lower, is what you're saying.
Yeah, absolutely. So months like say Q1 types, the inventory goes low. Again, you need to add on to the inventory in say the change of season in summer. So February, March, the inventory has to go up. But again, that inventory is sold in April, May, and June, and obviously the inventory goes down. So this is one, and also we have added women and kids wear. So there also we have added the inventory to begin with, which we have been researching for good 9 months, and then we have launched both these categories. Also, our winter wear is doing very well. The value of winter also goes up. That is again one reason that the value of inventory seems to be high.
Finally, sir, any growth guidance going ahead in terms of growth margin? Can we maintain similar growth, similar margin going ahead?
See, absolutely. I'm focused on a 30 to 35% growth, which we have been mentioning, but we are growing, faster than that. So I would like to say that we will grow anywhere between 30 to 40%, year on year.
Okay. And we see that you are also issuing warrants to yourself, so increasing your ownership. So probably you are seeing a lot of conviction in your business.
Absolutely, absolutely. That is one reason, we want to make sure that, we are able to grow this. to a different level completely in the next couple of years. So the market is huge, the opportunity huge. I have been saying this for 12 months and the results are here to see. So this is the first half yearly result. I believe that this quarter also is going great for us. We are doing great with winter wear. Uh, we obviously added a lot of stock, but it is doing well. I believe winter wear will almost stock out in this coming quarter. And we have very good plans for summers. A lot of new products, new channels are opening. So I believe this is just the beginning.
Excellent, sir. All the best. Wish you good luck.
Thank you. Thank you so much.
Thank you, Kush. We'll take the next question from Kaushal Sharma. Kaushal, you can go ahead, please.
Hi, sir. Very good afternoon. Am I audible?
Yes, yes, Mr. Sharma, you are.
Sir,
Tell me.
as you said that we are going our product to Zepto and forward. So what kind of revenue have we generated yet? And what kind of mix we are expecting from this quick commerce going ahead?
See, quick commerce, we started in the month of July. So it has only been 3 months. So within the 3 months, quick commerce was a completely different new ball game. So we wanted to test first. So we went slow. We started with our t-shirts, which did very well. We were in fact stocked out, within 30 days of stocking up. But yes, we started with a smaller quantity. So we were trying to test the waters. So once that was done, now we have added 7 new categories in quick commerce. So we are doing kurtas, we are doing jackets, we are doing sweatshirts, we are doing trousers, and all these categories have started doing well. So quick commerce is something you have to take some time, understand the thesis of the market, what products will sell, what will not, and then take it forward. So for 3 months, I would not say the contribution is too big, but yes, it is growing rapidly. I believe going forward, quick commerce should be at least between 5 to 10% of our total revenue.
When are we expecting these levels from the next year or financial 27?
Uh, Too early to comment that because it has just been 3 months. Though we are seeing rapid growth, and we now also have POs for shirts and denims from quick commerce companies. But I believe this will come out very soon. Means specifying a date is difficult as of now, but I don't see it, stretching too far.
Kaushal, you have any more questions? Sir, we'll move on to Kapil Ahuja. Kapil, you can go ahead, please.
Hi, sir. This is Kapil. Uh, I am seeing flat revenues Q on Q. Can you hear me?
Yeah.
Hello.
And inventory has jumped up by 82%, the same portion on inventory because it's a fashion company and all boils down to inventory only. So, how much inventory write-offs have you done in the past 5 years?
See, our write-off is not much, Kapilji. We actually, I have already explained this in my earlier calls, but probably this is, we are interacting for the first time. So our strategy is a little different when it comes to, testing new products. So we test almost 100 new options every month, but at a very small depth. So we don't manufacture more than 100 or 150 units, any new style. So that hardly is, 20, 30,000 rupees worth each option. So
Okay.
our dead inventory levels are always very low. We are in a model of, test fast, fail fast, pass fast types. So whatever we new products we launch, whatever hero categories or say SKUs we get out of those, we only build inventory in those SKUs. Rest
Okay.
we cut off within 3 months, and that is also done by discounting and our offline channel. So we have both, online and offline channels to sell. So that helps us, whatever sell the smaller part of inventory which is left over. So
So,
our,
yes.
dead stock inventory is very nominal.
So with 61 crore of inventory build up,
Yeah,
can we safely say that it will be below 5% write-offs?
absolutely. I don't think even 5%. It will be below 2%.
Okay. Thank you. That's all from my side.
Thanks, Kapil. Sir, we'll take the follow-up question from Kaushal Sharma. Kaushal, you can go.
Hi, sir. Am I audible now?
Yeah.
Yeah, so my question is on your margin. I can see that a slight improvement in our EBITDA margin from 9.3% to 10.6%. Will it be sustainable in near future as we are going very good growth and using AI, exploiting data points and adding lots of varieties of clothes? So will this margin be improved in near future?
Uh, uh, Kaushalji, I will tell you, menswear is one segment where, in the entire apparel business, the margins are the lowest if you compare with women and kids. So we have just started with women and we have also launched kids. Also, from this season onwards, this year onwards, we are focusing more on this Q3 winter wear growth. So all these are high margin products if you compare them with menswear. So I truly believe that going forward, our margin should sustain and we should also be able to improve them a little.
What kind of target of EBITDA margin are we expecting with this man and woman category?
Uh, I see it's again too early to state a number, but I believe it should increase by at least 5 to 10% again.
5 to 10% means currently is around 10%. It will go to the 20%.
It can. No, 10% of 10%.
10% of 10%. So this is the differential margin from the apparel of men and the women and kids.
Women and kids also, quick commerce has better margins as you start selling more. The economies of scale comes in, and there also you get better margins. Also, platforms like Mintra, we are able to get a little better margins. Again,
So,
as the
yeah.
brand is getting established, our ASPs are going higher because our bottom wear is selling more. So the contribution of bottom wear is rising. So as our ASP, goes from a 350, 370 types to a 450 types, it will help the EBITDA margin to improve.
Yeah. And sir, what is the EBITDA margin in this kid and women segment and the man apparels?
So the kids and women kids, I would say, is at least 10 to 15% better than men's, and women is 20 to 30% better than men's.
And sir, since we are growing in online market and adding Zeptos and forward and all, so what kind of the commissions and things that we are giving to them in percentage term of overall sales value in
It
that you
is
can share?
around 30 to 33%.
30 to 33% across all the online, including quick commerce and all.
Yeah, this is the average. It starts from 20 to 23%, goes up till 40%. The average comes to 30 to 33%.
30 to 33%. Okay, sir. Thank you. That's all
Thank you.
myself.
Thank you.
Thank you, sir. We'll take the next question from Manisha Modi. Manisha, you can go ahead.
Hi, sir. Good afternoon.
Good
My
afternoon.
first question is, online e-commerce firms also have several other brands of theirs in this category. So, how does an e-com decide which to push up and what to push up or down? What is the chance that you wouldn't focus on their first page on search?
Sorry, your last line, I couldn't get it.
What is the chance that you would not focus on their first page on search?
Okay, so this is driven by algo. So this completely depends on the algorithm. So it is not, the company which decides. It is the algorithm which they have designed, and every company has almost similar, sort of algorithm, but yes, it varies. So the algo works like, the first thing is they check, every new listing which is live on any marketplace gets a minimum count of view. So say example, if today FTX goes live with 10 new styles, it will get almost 1 million views from all the leading marketplaces. Then the algorithm sees that which listing is getting more clicks. So the click through rate, whichever is higher, the algorithm pushes that in the front page. Then second, it comes the conversion, which is converted more. Third comes the returns and the review ratings. And then fourth comes the availability. So, we have cracked all these codes, and there is a lot of data bank which we have through which we know that what
Shailesh, your voice has gone away from the system.
Am I audible now? Can you hear me?
Yes,
Hello.
yes.
Yeah. So this is completely algo based, as I just explained you, as I just mentioned the 4 5 points, which leads a product to stay on the top. And end of the thing is end of the line is the right product at the right price, which customer is buying and giving a good review. Also, it depends on your say the experience of the brand, since how long the brand is uh, uh, selling on the platform, what is the uh, total business the brand is doing with the marketplace, and what is the overall performance of the brand. Like our overall rating on the marketplaces is 4.3 out of 5. So that is also one factor which drives the visibility of a product. And stocking the product throughout the country, like today we are in 9 states available. So probably 90% of the country we are catering within 48 to 72 hours. That also really helps because nowadays, the new generation is very impatient in terms of their delivery period. They want the goods faster. So you have to be, good enough to manage your inventory across the 9 states and your mother hub to make sure that the goods are delivered within 48 to 72 hours. And that really helps the algo to push your listing up.
Got it, got it. We are currently under an ASP of 599. So how
Correct.
do you see your target audience changing and hence volume being lower for incremental growth at higher margins?
See, I believe we don't want to change our target audience. We want to, this brand is, here to cater the masses which want to buy a great fashionable product, which is delivered to them fastest, which has a decently good quality, uh, between 299 to 599. So the brand is built like that, and this is the segment we want to focus. We don't want to change the segment. This is one. And coming to the improvement in margins, so that will come with the addition of channels such as quick commerce and other offline channels. And secondly is the addition of new categories and products. So the market we are not changing, the ASP we don't want to change. We want to expand the product line categories, and gain more margins out of that.
Okay, okay. And unlike other players, you don't have in-house manufacturing. So how do you control quality and product?
So I completely believe that world over there is no apparel fashion brand, bigger brand or say negligible. If there are many, I don't know. Means if there are any, I don't know. But there are hardly any brand who do their manufacturing also and are successful with branding also. So in-house manufacturing doesn't work if you want to have a complete line, of apparels. It can only work if you want to do, say, a couple of, categories. And again, then, you cannot do fast fashion business if you have in-house manufacturing. So I think that is a plus point for us that we don't manufacture ourselves, but we have enough resources, our intellectual properties through our uh, uh, factories and our research team, which we have developed. I think that is one big advantage of us. And about the quality, we have a huge quality control team uh, with an SOP which is working for us since last 10 years. And we keep on improving that, and keep using more new technology, new machines, to make sure that we are always updated with the changes in the requirement of the customer and the need of the quality.
Okay, but then can't your white labeling brands go direct with suppliers? Why would they want forecast in between the chain?
Because the brands which we cater are mostly large format stores. These large format stores, they have maybe a 10,000, 8,000 to 12,000 square feet store, where they want to keep products from multiple manufacturers. So every manufacturer, or say every brand, has their own handwriting, have their own USP in their products. So they, being a retailer, they want to have a mix of all the products. So there is always a room for a brand which is making decent product with latest fashion, and if the cost is reasonable. So there is always a room.
Got it, got it. Thank you, sir, and all the best.
Thank you.
We'll take one question from the chat from Mr. Lakshmikant. What is the current capacity utilization rate and whether the company is operating at optimum utilization levels?
They mean to say utilization of the production capacity?
Yeah, I don't think you have manufacturing, so this question
Absolutely.
may
So,
not be
yeah,
relevant, right?
yeah, actually.
Yeah.
So we can always, increase our capacity in terms of outsourcing in any product we see traction with. So we started trousers with, say, selling them for at around, say, 10, 15,000 units a month. Today we are selling almost 70,000 trousers a month, and we have increased the capacity, in a span of 3 months. So I don't see that, as a big challenge here.
We'll take the next question from Majid Ahmed.
Am I audible, sir?
Yes.
Yes, Madhu.
Yes, sir. Very good set of numbers, sir.
Thank you.
Sir, my first question, sir, is regarding, especially on a working capital. Especially, I'm seeing your inventory has gone up and your payables to supplier has been more speedier. So, for us to sustain growth with the working capital, would be in the similar range, or would it again increase? How are we going to manage that along with growth? Because
So,
if we again keep on diluting capital, raise debt, our ROC is also gets on diluting as we. So how are we going to sustain that?
So we have not, diluted any further capital since our listing. This warrant issued, is 70-80% subscribed by me and my brother. So this is one. So we have increased our holding there. And secondly, the working cycle capital, is going to be similar. But yes, this is our growth phase. If in this phase we don't try to, maximize our opportunities, we will miss the bus. Also, we are, working on adding more categories, trying to push more channels, trying to, create more number of options every month. So this is here to stay, but yes, in a balanced way. As I, just answered in my previous question, that 90 to 95% of our inventory is not the new inventory. It is of the products which are already selling. So we just try to add on more depth to them to maximize the sales of the same. So I don't see that inventory is going to be an issue here. Number two, the inventory always will go up, during the Durga Puja season, because we'll need to manufacture them, the inventory of at least 30 to 45 days before Calcutta almost shuts down for 2 to 3 weeks for Durga Puja. So that is one time, and again, the summer season is one period where you need to, add up more inventory to cater to the growing demand.
Got it, sir. But But I'm seeing the trend wherein our payables are keep on decreasing. Like, are we paying sooner to supplier? Do you have any constraint with your supplier? Like, that's
It
my
has been our policy, to make sure that our suppliers are paid well. This is since, our establishment. Number two, during Durga Puja and Diwali, we make sure that, our suppliers are paid really well. This really helps, to create a very good reputation in the business. And the way we are growing, we will need a lot of suppliers, a lot of new suppliers, and existing suppliers will need, with a lot of depth. So this is really, I think, helping us where in this market people are not paying too well to their suppliers. We always tend to pay at the right time, or probably, we try to relate with their issues and try to help them out there. So this is, actually helping us create partners for long term, where if we want to, say grow 4 to 5x from here, these are the same set of suppliers which will become pillars, going forward. Also, at difficult times, these are the people which will help you, help the company to sustain, in the right health.
got it, sir. But the only concern that I'm facing, sir, is that if we see the trend of payables, FY24 it was 124 days, FY25 is 47 days, and now it is 13 days. So I'm seeing very hastiness in terms of payables. How are we going to normalize that? I understand that for business growth you're looking at it, but yeah, as we do like this, then you will have a lot of requirement of working capital to
No, I
feed
will
such
come to
growth.
that. So 124 days to 47 days was the period when we got listed and the IPO fund did come in, and we utilized it to, giving it back to our suppliers to make sure that we can, grow our supplier base. So this is one. And here what you see, we have paid because this is again the time of Durga Puja and Diwali. Uh, Also, there was this uh, natural calamity in Punjab. So Punjab is the place from where most of this, fabrics for winter comes in. So that was the time when people were not trying to, take advantage of the situation and get the goods for cheaper. So what we did was that we went all in the month of August and September and bought a lot of winter wear from there. So today's the situation that only 50 to 60% supply is happening through Punjab this time, and there is a huge crisis of the raw material. But with us, the situation is completely different. Our targets for the winter wear, sales are almost going to be achieved, or probably we will overachieve that. This was just done for the same reason that we foresighted it, that winter, raw material supply is going to be mostly from one state only, and that state is in trouble. It is better to buy in cash and build up the inventory, than wait till the last end. So currently the market is struggling with winter wear procurement because the manufacturing is only happening, 50 to 60%. So these are some, challenges which one faces, and you need to, take the right call at the right time uh, to keep growing.
So this is more of a strategic call that you have taken to capitalize on the
Abs-
opportunity.
Absolutely, and that is the reason, this season we are doing great with our winter wear products. If you
That's
have
great, sir.
Zepto around you, just order a sweatshirt of ours. You will understand what kind of
Sure,
quality
sir.
you are getting at what price point.
Sure, sir. Sure, sir. Really great, sir. All the very best, sir. I am really impressed by your level of growth that you're achieving.
Thank you. Thank you.
Sir, we'll take this. Sir, we have another question from Kush Tandon. Kush,
Uh, Sir, do we plan to do D2C ever? And why are we not doing it in a meaningful manner? Is there a strategic call, or you see some challenges there? Any views on that?
See, D2C is great, but it is not for the brand FTX. So, I probably feel this is the mistake which people do. They start their D2C, but, the the per click cost, the CPC cost of both Google and Meta have gone up rapidly in last 4 or 5 years, and it is here to grow only. This will not sustain. Also, at our price point where the ASP is around 400 rupees, we will not be able to, spend that kind of money in terms of advertisement. Also, handling the returns by ourselves will be a challenge. It will only increase our manpower cost and our management cost, our tech cost, everything. So we have taken this, I believe, smarter route by selling through online, where we pay commission only when the product is sold. We are not paying anything before that. And then we are working on the algorithm of the platform to make sure that the sales happen. That is way cheaper than trying to sell it through D2C. Also, because we are omni, we don't need to burn on D2C. We can be profitable and keep work, moving ahead and adding categories. So I believe D2C is not for brand FTX. I completely believe in D2C, but this segment of where we are trying to cater the market is not for D2C.
Okay, so no plans to do D2C in the near future.
With FTX brand, no, we will not go D2C with FTX same segment brand. Anything we do other than any other lines of FTX we do, which is at a higher segment, higher price point, then only we can go D2C.
Okay, understood. Thanks, sir.
Sir, this was the last question for the day. Would you like to give any closing comment?
So thank you, everyone. Thank you for joining. We are committed to take Forcas Studio and FTX to become the first value brand of India, which is omni and which is without any store or D2C. So a lean model brand where customer and quality comes first is our motto. So we are working very hard on that, and we believe that we'll be able to achieve that and brandify this brand completely.
Thank you, sir. Thank you to the management team for your valuable time, and thank you
Thank you very much.
to all the participants for joining on the call. This brings us to the end of today's conference call. You all may disconnect now. Thank you.